Tesla has lost what once made it untouchable. Not because of a single bad quarter, not because of one production mistake, but because of a series of decisions that quietly piled up beneath the surface until the market could no longer ignore them. In 2026, the question is no longer whether Tesla has the technology. The question is whether it still has trust. For the first time in its history, Tesla is no longer the leader in the market it created. And the reason is not what most people think. This is not just a story about batteries, factories, or competition. This is a story about image, perception, and the thin line between vision and promises. A line that has become dangerously blurred, especially when business started mixing with politics. For years, Tesla was the symbol of the future. Electric vehicles, autonomy, software on wheels. But in 2025, that story breaks. Tesla delivered 1.636 million vehicles, a decline of 8.6% compared to 2024, when deliveries reached 1.789 million. In the fourth quarter, the drop was even sharper. 16% fewer vehicles. 418,000 compared to 495,000 a year earlier. At the same time, China's BYD delivered more than 2.26 million pure electric vehicles, an increase of 28%. For the first time ever, Tesla is no longer number one in the BEV segment on an annual basis. This is not just a statistic. It is a psychological turning point, because markets do not react only to numbers. They react to narratives. And for the first time, the narrative around Tesla has turned against it. The decline does not come from one direction. It comes from several at once. And none of them is purely a technical issue. First, brand perception. Tesla has never been a traditional car company. It sells emotion, identity, a sense of belonging to the future. But between 2023 and 2025, Elon Musk's public statements became increasingly polarizing, especially his open support for Donald Trump and right-wing political groups. Ahead of the 2026 midterm elections, Musk donated approximately $290 million to Republican campaigns, warning that America will collapse if the left wins. The market reacted immediately. A Yale study from October 2025 showed that Musk's political alignment cost Tesla between 1 and 1.26 million vehicle sales in the United States. Without this effect, sales could have been up to 83% higher. In the first quarter of 2025 alone, sales would have been up to 150% higher if partisan polarization had not occurred. Democratic consumers historically, Tesla's core customer base shifted to competitors. Republican buyers began supporting the brand, but not nearly enough to offset the losses. In Europe, the reaction was even more visible. Musk's support for right-wing movements such as Germany's AfD triggered protests outside Tesla showrooms. Sales in certain months of 2025 fell by 40 to 45%. In Germany, even during more stable months, declines reached 20%. Protest signs read, "Honk if you hate Elon." Tesla advertisements were burned. This is not a moral judgment. It is a market reaction, and it destroys loyalty. But politics alone does not bring down a market leader. The real damage happens when it combines with something else. Second, expectations versus reality. Tesla does not just sell cars. Tesla sells the future in advance. For years, that worked because results eventually followed. But in 2025, management promised growth of 20 to 30%. Instead, the company delivered a nearly 9% decline. At the same time, the Trump administration eliminated federal EV tax credits. $7,500 for new vehicles. $4,000 for used ones. The incentives expired on the 30th of September 2025. The result: U.S. demand collapsed in November and December. Trump-era tariffs on Chinese EV components further increased production costs. And Musk's support for Trump through the Doge initiative, where thousands of workers were laid off, intensified public backlash. The irony: Tesla supported a political project that simultaneously removed its own subsidies. Trust eroded. Later, public feuds with Trump did not help. The damage was already done. Third, competition no longer waits. BYD and other Chinese manufacturers offer lower prices, faster iteration cycles, and broader product ranges. Even with EU tariffs of 35% plus additional import duties, BYD's growth in Europe exceeded 200% in some months. At the same time, Tesla's sales in those same markets fell by as much as 50%. In China, local competitors continue to squeeze Tesla. In the US, tariffs paradoxically help Chinese players find long-term entry paths. Consumers now have choice. And choice always shifts power dynamics. When declining trust, unrealistic expectations, and aggressive competition collide, the result is a perfect storm. But the biggest problem appears here: unfulfilled promises. The robotaxi narrative has been ongoing for years. In July 2025, Musk promised a mind-blowing demo and coverage for 50% of the U.S. population. None of it materialized. Regulatory data shows that fully autonomous driving without supervision is still not ready for mass deployment. The technology has not failed, but the gap between promises and reality has become too wide, especially for investors already skeptical after the Doge fallout. The same applies to the Optimus humanoid robot. Presented as a long-term platform, but communicated as something arriving soon. Factory deployment was promised for 2025. By 2026, it remains in testing, with no commercial rollout. Again, the issue is not the product. The issue is timing. The financial impact is clear. Margins are shrinking. Costs are rising. Net income in the first quarter of 2025 dropped by 71% year over year. The stock reacted. The price fell. Market capitalization lost tens of billions of dollars. Subsidy removals and tariffs cost Tesla billions. Boycotts deepened the damage. At the same time, Musk is leading SpaceX, xAI, and other ventures that are gaining momentum. SpaceX dominates commercial launches. xAI expands operations in Palo Alto. This is not an accusation. It is reality. Leadership focus is divided. For a market accustomed to Tesla being the top priority, this shift is closely watched. Tesla, in 2026, is not disappearing. It is not collapsing, but it is losing its exception status. It is becoming a large automotive technology company judged by deliveries, timelines, and execution. Not by tweets, not by promises. The era in which Tesla had no serious challenger is over, partly because political games turned against it. This is not just a story about Tesla. It is a lesson in what happens when vision becomes industry. When markets stop believing words and start demanding proof. If this deep dive was useful and you want to see how the same patterns repeat across other major companies, subscribe to the channel. In the next video, we go even deeper into how markets punish hype and reward execution. See you next time.